Good morning, everyone, and welcome. Today, we're diving into a comprehensive overview of global audit standards and practices. We'll explore how these frameworks ensure audit quality, uphold ethical principles, and maintain the trust of stakeholders across different jurisdictions. I'm excited to take you through this important topic that lies at the heart of reliable and transparent financial reporting worldwide. Let's get started. Let's take a closer look at some of the key audit standards you need to be familiar with. First, we have the International Standards on Auditing, or ISAs. These are issued by the International Auditing and Assurance Standards Board, and they provide a set of globally recognized procedures that auditors follow to ensure consistency and reliability across audits worldwide. Next, there's the Generally Accepted Auditing Standards, or GAS, which are primarily used within the United States. These standards guide auditors in applying appropriate procedures and achieving quality in their audits domestically. For audits of public companies in the U.S., we rely on the standards set by the Public Company Accounting Oversight Board, known as PAB standards. These are specifically designed to oversee and enhance the quality and integrity of audits in publicly traded firms. Ethics play a crucial role in auditing, which is why the IESBA Code of Ethics outlines the ethical requirements auditors must adhere to. This code ensures auditors maintain integrity, objectivity, and professional behavior throughout their work. Finally, at the firm level, quality control standards and various national frameworks come into play. These address the processes firms implement to maintain audit quality. While national standards may vary to reflect local regulations, they all align with core principles aimed at ensuring consistent audit quality everywhere. Understanding these standards is key to performing effective and compliant audits. Audit standards serve several important purposes. First, they provide auditors with comprehensive guidelines that must be followed throughout the entire audit process. This ensures that audits are conducted systematically and professionally. Second, these standards promote consistency in the quality of audits, making it possible to compare audit results across different firms and jurisdictions reliably. Another key goal is to enhance public trust by reinforcing the reliability and credibility of audit outcomes, which is essential for confidence in financial reporting. Additionally, audit standards help protect the interests of various stakeholders, including investors, regulators, and the general public, by ensuring transparency and accuracy. Finally, the scope of these standards is broad. They apply not only to financial statement audits but also to compliance and operational audits, covering a wide range of assurance services. This comprehensive coverage helps maintain high standards across all types of audits. The International Standards on Auditing, or ISA, are developed by the International Auditing and Assurance Standards Board, known as IASB. These standards provide a comprehensive framework for conducting audits across the world, ensuring consistency and quality regardless of location. One key aspect is the clear definition of audit objectives, which helps guide the auditor's work and focus. The ISA also emphasizes the importance of risk assessment procedures. This means auditors must identify and evaluate risks of material misstatement in the financial statements early on. When it comes to gathering audit evidence, the standards specify both the nature and extent of the evidence needed, ensuring it's sufficient and appropriate. Additionally, they provide guidance on when and how to involve specialists, such as valuers or engineers, to support the audit. Finally, the ISA aims to standardize audit reporting requirements, promoting uniformity and maintaining high-quality audit practices worldwide. This standardization is crucial for building trust and reliability in financial reporting across different countries. When we look at national audit standards, it's important to recognize that while many countries adopt the core principles of the International Standards on Auditing, they customize these guidelines to fit their own regulatory environments. For example, in the United States, audits of private companies typically follow the Generally Accepted Auditing Standards, or GAS, whereas audits of public companies are guided by the standards from the Public Company Accounting Oversight Board, known as PAB. Moving over to the United Kingdom, audit standards were originally set by the Auditing Practices Board, but these have now been replaced by standards issued by the Financial Reporting Council. This reflects changes in regulatory oversight over time. And lastly, in countries like Canada and Australia, national audit standards are closely aligned with ISA principles, but they also include additional guidance specific to their regional contexts, ensuring auditors can address local needs effectively. This blend of international consistency and local customization helps maintain audit quality worldwide. Ethical integrity is the foundation of trustworthy auditing. It ensures that the entire process is credible and reliable. Central to this integrity is the requirement for honesty and fairness in every action we take. We must always be truthful and just in our work. Alongside this, the principle of objectivity requires us to remain impartial, avoiding any conflicts of interest that could bias our judgments. Maintaining professional competence and exercising due care is equally important. We need to continually update our knowledge and apply the appropriate level of diligence to each audit. Finally, confidentiality and professional behavior are key. We must respect the privacy of client information, comply with all relevant laws, and avoid any conduct that might harm the reputation of our profession. These ethical requirements collectively ensure the highest standards in auditing. When planning the audit engagement, the first step is to really understand how the entity operates. This means getting a clear picture of their business environment and their internal controls, so we know what systems and processes are in place. Next, we assess the risks that could result in material misstatements in the financial statements, focusing our attention where it matters most. Then, we define the audit scope and objectives clearly, deciding what areas we will cover and how we'll allocate our resources effectively. Based on this, we develop a detailed, tailored audit strategy that addresses the specific risks we've identified for that entity. Finally, we establish communication protocols with management and governance bodies, ensuring everyone is on the same page and cooperation flows smoothly throughout the engagement. This structured approach helps set the foundation for a successful and efficient audit. On this slide, we focus on the critical steps of risk assessment and materiality in the audit process. First, it's essential to identify and evaluate the risks of material misstatements, both at the overall financial statement level and for specific assertions. This helps us understand where errors or fraud could potentially occur. Next, we assess the various audit risks: inherent risk, which is the susceptibility of an account to error; control risk, the risk that internal controls may fail; and detection risk, the chance our audit procedures won't catch a misstatement. Combining these gives us the overall audit risk, which guides our approach. Finally, we establish materiality thresholds, defining what level of misstatement is significant enough to influence decision-making by users of the financial statements. We rely on guidance from ISA 315 and ISA 320, which provide structured methods to perform these assessments thoroughly, ensuring that our audit is both efficient and focused on the most important areas. When we talk about gathering audit evidence, the first thing to understand is how important it is to collect enough reliable evidence to back up the auditor's opinion. Without sufficient and appropriate evidence, the audit conclusions wouldn't be trustworthy. One common technique used is inspection. This means carefully examining documents, like financial records, as well as physical assets, to verify their existence and condition. Next, we have observation. This involves watching processes and procedures in action to make sure they're being carried out correctly and as expected. Communication is also key. Auditors conduct inquiries and interviews with management and staff to gather insights and explanations. They also obtain external confirmations from third parties, which helps verify information independently. Finally, auditors assess how reliable and relevant the evidence is, following the guidelines set out in ISA 500. They thoroughly document all their findings to provide a clear and solid basis for their audit conclusions. This process ensures the audit is both credible and transparent. Audit documentation is essential because it provides a clear record of all the audit work performed. This ensures transparency and helps maintain quality control throughout the process. When we talk about the key elements of audit documentation, it's important that the records are both clear and complete, detailing the procedures followed, the evidence gathered, and the conclusions drawn. These documents also need to be prepared in a timely manner so they can support ongoing audit activities and allow for effective reviews later on. Moving on to the audit report, its primary role is to communicate the auditor's opinion on the financial statements. It also explains the basis for that opinion and highlights key audit matters. This helps stakeholders understand any significant issues the auditor encountered during the audit. Quality control within audit firms is governed by mandatory standards like ISQC 1 and ISA 220, which set the foundation for maintaining high-quality audits. A critical aspect is leadership responsibility. Leaders must actively promote and nurture a culture that prioritizes quality in every aspect of the audit process. Equally important is strict compliance with ethical requirements and maintaining independence to ensure unbiased and trustworthy results. When it comes to client acceptance and continuance, firms follow specific procedures to evaluate risks and suitability, while also focusing on recruiting, training, and assigning personnel who are competent and well qualified. Finally, ongoing monitoring and timely remediation of any deficiencies are essential to continuously improve and uphold the firm's quality standards, thus ensuring audits consistently meet both professional and regulatory expectations. Now, let's look at some of the recent updates to audit standards that are shaping the way audits are conducted. First, there's an enhanced focus on reporting key audit matters. This means auditors are required to provide clearer and more detailed information about significant issues identified during the audit, which greatly improves transparency for stakeholders. Second, there's an increased emphasis on identifying and responding to fraud risks. Auditors are now expected to be more vigilant and proactive in detecting potential fraud, ensuring that these risks are thoroughly addressed. Third, the guidance on group audits has been updated to better reflect the complexities of modern organizational structures. This helps auditors manage audits across multiple entities more effectively. Finally, there's the integration of emerging business considerations, including new business models and technological advancements. Adopting these updates on a global scale ensures audits remain relevant and effective in the face of constantly evolving business environments. Overall, these changes strengthen the quality and reliability of audit processes worldwide. Audit standards play a crucial role in ensuring audits are performed consistently and with high quality across the globe. This consistency makes it easier to compare financial information between different organizations and countries. They also boost stakeholder confidence by ensuring that financial reports can be trusted, which is essential for investors, regulators, and the public. Another key point is that these standards strengthen auditor independence and promote ethical behavior. This helps maintain public trust in the audit process. By enforcing rigorous guidelines, audit standards are instrumental in preventing corporate scandals and financial misstatements, protecting both the markets and stakeholders. Finally, audit standards contribute to the continuous development and credibility of the auditing profession itself. As business environments evolve, these standards ensure auditors remain effective and reliable, supporting the integrity of financial reporting systems worldwide. Overall, their impact is fundamental to maintaining transparency and trust in the financial world.